What's up, guys? RB here from the Compound Trading Group. I just want to do a little video today on how I use multiple time frames and with market structure and how I prepare for the day. What I like to do is kind of have a top-down approach. There's a little thing I always say that higher time frames usually prevail. And so what I like to do, we'll use SPY here for an example, is start on a daily or weekly and just see what a market structure trend is doing. For those that don't know already, when I say market structure trend, is the market in an uptrend? Is it in a downtrend? Or is it a ranged market? And to know that, if we are putting in higher highs and higher lows, like this right here, we are in an uptrend market. As you can see, we have a high. That high is broken to put in a new high, which also gives us a higher low. If we are putting in lower highs and lower lows, we are in a downtrending market. So if we're doing this number right here, that gives us a downtrend market. We have a high, we have a low. That low is broken, gives us a new low, which in turn gives us a lower high. And then when a range market is where the market is ranging between 2 points. So we have a high, we might come here double top, come back down to the bottom. Nowadays in 2022, we're going to barely break that top, come back down into the market to get back in, work back down. And this is what we confer as to congestion. When you hear us say congestion, this is what we're talking about. We're talking a market that puts in a range. So you have a low and you have a high. And nowadays they're liking to do liquidity sweeps out of that, but we stay in a trading range. So with that knowledge, what I like to do is take the day and go through and see exactly what we're doing on higher time frames. So I'll start on a weekly, and I'll just look on a weekly sense and see, okay, we were in an uptrend. We broke a low to set a lower low. Then we put in a lower high to put in a lower low. But then we had a break of structure right here to put in a higher high. So which means with the break of structure, we have a few possibility outcomes. This could be a tiny liquidity sweep right here. We never closed above the high. So we could just be seeing a tiny liquidity sweep out to come back down. This could truly be a break of structure, and we're going to come down and put in a lower high to go back up to break the high. But as far as market structure goes, we just broke the high, set in a higher high, and now we're expecting the lower high to be put in. So I like to say that the weekly is in an uptrend. When we look at the daily, we see the same thing. We had a high, we had a low. That low was broken, which gave us a lower high. And now we have broken that lower high to make a higher high. So the daily is in the same spot as the weekly. So if we go to the 4-hour trend, what we can see here is we were in a ranged market. As you see, here was the high, here was the low, and we were sitting in that range. We went up to break out of that range. Kind of the same story as earlier. Is this a small liquidity sweep? Or do we physically break a structure? Now we know with market structure, this was a physical break of structure. We had closed candles above, back in. So our expectation is to put in the higher low, which would look something like this right here. Higher low, bounce, set a new high. So our 4 hours in uptrend. And then I just look at every other time frame, right? We got a 2-hour. We were making an uptrend. We're putting in an uptrend. We put in a high. We came down, put in a low. We never broke structure low. We bounced right off structure low right here. So right now, we are kind of in a 2-hour range possibility. If we go to a 30-minute chart, what do we see? we see we're putting in an uptrend. We broke that trend to come down to do a downtrend. So we had a low here. If we mark our low here, we kind of had a high right here. You know, we broke that high. We put in an uptrend to kind of start a downtrend in market. We broke that. We came in and put a lower high right here. You know, we went down, put in a new low. We broke that low to put in another lower high right here. So as we can see on a 30-minute chart, we are in a downtrend starting the day. So we have, let's see, let me turn these back on real quick. So what we have is we have our weekly in an uptrend. We have our daily in an uptrend, our 4-hour in an uptrend, 2-hour in a potential ranged market, and we have our 30-minute in a downtrend. So what I like to do is take my little notes here, and I like to just write these out real quick. So 30-minute range, 2-hour range. We have the 4-hour BOS uptrend. BOS is break of structure. Daily BOS uptrend. And our 30-minute was actually downtrend. So for me being a scalper, I trade on the 1-minute chart. I use the 5-minute for market structure, and I use the 30-minute for my trend. These are very important to know. As I said at the beginning of this video, the higher the time frame usually prevails. So if I was to look at today's market with that kind of in mind, I like to stay on the 30-minute chart here for a second. Let's bring this down into our world. Okay. So if we zoom in on a 30-minute chart, what I like to do before the day starts is just kind of get a feel for potential outcomes here, right? On the day. So we know on a 30-minute we have our levels here. We have a bounce out of a demand zone in the past that we leveled off, set a low right here yesterday, and that was a 5-minute congestion zone that we were in all yesterday. And we have a high, and in pre-market we're bouncing in between those. So I know a possibility for today would be to do this right here. Like, you know, we can respect that, come down, set a low, bounce and break that. That's a possibility. We're in a downtrend market on a 30-minute chart. So as long as we withhold this high here, you know, that'll continue our downtrending market. Another possibility would be to come off this, maybe put in a low bounce and sitting a range all day, right? We could do this right here, and that would be a consolidation range market. Another possibility with our higher time frames being an uptrend would be to come down, double bottom, right, and go set a high. So those are our possibilities. I don't leave these here because no one could trade with all that information right there. But I like to just physically draw that out one time, and it kind of gives me a goal in the day, right? Or what are some possibilities? So when trying to build out a trading plan using those time frames, it allows me to know. So what I like to do is take the high right here, right? And I know if we break that to the upside, we're in an uptrend. If we break this to the downside, we're in a downtrend. And as long as we're in between these two things, we're in congestion. So I like to take a Fibonacci, and I like to draw out my 50% retracement. If you've ever heard me talk about this, this is what is called fair market value. You will see price come around this area a lot when you're in congestion. Number one is because it's 50% retracement, but it is where price is imbalanced. And so when you have a balance of price, that's what causes congestion, right? Your sellers and buyers are in agreement that this is kind of a fair value. And until one side decides they're okay with paying a premium, your price is going to stay in with this area. And as we look at that, what we see is anything above this line right now, for puts, you're paying cheap. You're getting a good price, right? Anything below this price right now, for longs, you're getting cheap. And then to flip it, anything below this line, puts wise, you're paying a premium. Anything long wise above this line, you're paying a premium. So that's why I kind of like to know where this line is, because as we're playing this congestion area until we break out, I know a higher probability on risk reward trade would be to be short above it, long below it. Now with that, you still have to have a trading plan and what you're trading off of. So coming into today, I like to go to the 5-minute chart. And I'm a 5-minute structure trader. So what I like to do is trade on a 5-minute structure that is given ahead. So that's going to be my targets. That's going to be my take profit areas, and I'll go to the 1 minute for entries, but I'll mainly use that chart for my targets. So if I look at the chart, as we can see, we're also in this 5-minute congestion. We put a low, we put a high. So until with the same as the 30-minute and 5-minute are in confluence, we know that we can expect a lot of chop coming into this day until one of these sides are broken, and somebody's going to win that battle. But until then, we know we're in congestion, and we have to trade accordingly. My rule for congestion is anything I trade is pretty quick scalps. I don't like to sit around in a position very long in congestion because price likes to flip all over the place. So if we go through today and forward a few candles, right? Start the day, and that's what happens right off the bat, right? Okay. We get a lot of chop through EMAs. Our EMAs, we got a lot of heavy wick candles, indecision being made. But what we can see is, right off the bat on 5-minute chart, we put in a supply zone. We came down, we tested that supply zone, and we were pushing below fair market value into a demand zone. And we worked to this area on the bottom demand zone for all day. Now, taking trades within this area, this is what I'm talking about. These are the areas that are higher probability for me. We're in a downtrend on a 5-minute market. But until we get out of congestion, we are paying premiums for puts in this area. Not saying you can't make money doing that, but you got to know that, right? They're quicker moves, quicker scalps. But calls, you're cheaper, so your contracts are going to move slower against you. And so these are areas of confluence that you could look for pullbacks, trade. But being in congestion is smart to wait until you get in an area of interest, and that's what this bottom line was, right? We said we're either going to break this bottom line and go into a downtrend, or we're going to bounce off this bottom line and work our way up to stay in congestion, or we're going to bounce off, put in a lower high on a 30-minute. A low, basically double bottom on a 30-minute, and work our way up and have a break of structure and change structures because our higher time frames are in an uptrend. So throughout this day, that's exactly what I was looking at. I was looking at this downtrend right here. I was looking at it on a 1-minute chart. And as you can see right here, we got a break. We got a change of character that we've taught in a lesson. If you haven't gone check out that lesson, you need to, because on a 1-minute chart, we had multiple change of characters, multiple opportunities to play calls right here, right? On change of characters, push up. And then we got a break down, bounce off the trend line, and almost exactly on that low of the 30-minute. Now, when we get that break, we look for the same thing, change of characters. Puts are a premium down here right now. Calls are cheap. And when we break this line, we'll have a new trading range, and that'll move the fair market value when you have a new trading range. But for right now, that's the range we're in. So, as you can see, we had multiple opportunities in here for trades in congestion. You just had to play smart. You had multiple trend breaks. We had a wedge right here, wedge pattern coming in right here. There's your wedge right there. So you had plenty of opportunity to catch a trade, to take it to the long side, but that's how I know. So if we go back to 30-minute chart right here, okay, we pivoted, right? We came down, we pivoted. Here's that low break right here And if you look on a higher time frame, what do you see? A potential higher low. Now this isn't a confirmed higher low until we break structure high, but as of right now, it's a potential higher low, and that's how we would trade it. If you were in a 5-minute chart and you went long right here, you could go long back up to the top of the range because that's your market structure. So if we go back to the 5-minute chart, and we push ahead and we keep looking at what happened, you get fair market value, so you kind of range up and boom, you hit your target, right? And so that's how I use higher time frames in confluence with lower time frames to plan out a trade. Throughout this move, you were still in congestion because you just bounced off the bottom, you stayed in congestion, but now you have a break of structure, and that puts your 5-minute chart in an uptrend, and we know this line was also our 30-minute chart. So now our 5-minute or 30-minute are in confluence with higher time frames. So now we can expect a trend up with this break. And so we will do the same thing. We'll have area of confluence as we're in an uptrend. We're looking for pullbacks. Here was one right here. You had a 5-minute flag, and there's another flag, right? And that was into market close. But you see what I'm saying? Going into tomorrow, now our 5-minute change structures, our 30-minute change structures. They're all in confluence now. So going into tomorrow, not to have a bias, but our trend bias will be uptrend. We just broke that range, right? We just broke the structure range, and now we've put in a higher high. And so we could come down, make a higher low for tomorrow. If we look this on higher time frame and we treat it just as we did going into today's time frame, let's see. So what did we do? Here's our 30-minute chart. We came down, we made a double bottom, a bullish move. We pushed all the way up, broke structure, came down. So for tomorrow, we could draw an area of interest. This was a structure. This was a resistance earlier. We can see if we can get a pullback into this liquidity to become support and a bounce to keep this trend happening. We failed the 200 here. So we could get a small push down, set a new higher low. We just made a high. So now we could set a higher low for the continued uptrend. But we're going to trade with the probabilities of our uptrend continuing. And as long as we're with trend and trading in probabilities, we have a better chance of being successful in the market, and we have a smaller risk. Because if you look at these moves in an uptrend going with the trend, when we get that structure break, right? You had to pull back into structure. You could have played, that's your risk. You had a flag right here. Your risk, maybe the 20. Maybe, it was the 200 right here. So it gives you high probability trades, and that's how I use multiple time frames to decide how I'm going to trade, where I trade, and how I kind of map out the picture for the day to give me an idea of what could happen. I hope you enjoyed this lesson. If you have any questions, join us on our Discord. And we have Ask a Leader Help area, and we'll be more than happy to help you. Thank you.